Hey folks, welcome back to Analysis Finance. In the previous video, I already told you that I'll be making a video regarding different types of mutual funds. Okay, so in last video, I told you how to pick a mutual fund based on different criteria. As a second part of that, there are many different kinds of mutual funds. So, we have to understand what are different kinds in order to invest in it properly. So, let's just directly get to it. The first thing is like equity based mutual funds. So in equity based mutual funds, the mutual fund will be investing a certain amount in particular individual stocks. For example, the companies like Reliance, Infosys, HCL, LTIMindtree. When the funds are investing these amounts into individual companies, that's known as equity based mutual funds. Okay, and in that there are many different subcategories. Though there will be large cap mutual funds, mid cap mutual funds, small cap mutual funds. So these are based on the size of the companies in which they are investing, and they also have a certain rule in which the percentage investment should not be greater than 10% of the entire fund. If the company is having almost 10,000 crores, I mean, sorry, if the mutual fund is having almost 10,000 crores asset under management, then their allocation should not be more than 10% into one company. Okay, so the maximum they can invest is 10% into one single company. So that's equity based mutual funds. Then comes um, index funds. Index funds is like when mutual funds are investing into particular indexes. For example, Nifty 50 is an index, Sensex is an index. So Nifty 50 means the top 50 companies in India. Okay, so when mutual funds invest into particular indexes, that's known as index based mutual funds. So index funds are the most commonly invested funds throughout the globe because it's comparatively medium growth, and comparatively it's better returns than FDs. So that's the most chosen funds throughout the globe. Then comes another thing called debt mutual funds. Debt mutual funds is means by that when companies will be taking loans from different entities, might be banks or different kind of things. So these debts are called corporate bonds or government bonds. So we are buying that bonds, the value of that bonds. I mean, whatever interest they are paying, we'll be getting a cut of that. So based on that, the debt mutual funds are made. Okay, so we are investing in those bonds. So that's what is called debt mutual funds. Okay, so we covered the equity, then index funds, and then the debt funds. And inside the equity, there is one single thing which acts as a support of it. I told about the large cap, mid cap, and small cap. Okay, there is one another thing which is dividend reinvestment and dividend payout. You might be knowing what are dividends. Like I already made another video regarding that. Okay, dividend reinvestment means the companies in which the fund have invested will be giving you a certain amount of money as dividends. In dividend reinvestment, these amounts will be reinvested into the same mutual fund, and that money will compound later. Okay, but in dividend payout, when the companies are paying you certain amount of dividends, that dividend will be coming directly to your bank account. Okay, that's a difference between dividend reinvestment and dividend payouts. Otherwise, it's better to have dividend reinvestment because it's getting on compounded in the future. Okay, so that's done. So we covered equity, index, and debt funds. Then comes gold, gold ETFs. There are particular funds which will be investing into the gold that particular entity or banks are have in their hand. Okay, so these mutual funds will be investing into these gold funds. Comparatively, the returns will be less, but the safety will be much higher. That's why people invest in gold funds. Then there is another thing called hybrid funds. In hybrid funds, it's a mix of different funds. Okay, so in if you are investing in one hybrid mutual fund, inside that hybrid mutual fund, that fund will be investing into equity, gold, corporate bonds, into indexes. So it's a mix of different things combined together to make a single fund. So that's called hybrid funds, and the risk of that hybrid fund will be always medium. It's comparatively medium risk fund. So we covered equity, gold, debt, index, and hybrid funds. All right. Then let's go to gilt funds. Okay, gilt fund come into a subcategory of debt funds. In debt funds, we are investing into corporate bonds and in government bonds. But in gilt funds, we are only investing in government bonds. These government bonds are comparatively much more safer. The returns will be less, but still, it's comparatively much more safer than the corporate and government bond mix. So that's one thing called as gilt funds. Then comes tax saving ELSS funds. These tax saving ELSS funds are a whole lot another thing to be discussed later because it includes many different kinds of complexities and things inside that. I'll make a separate video regarding tax saving funds. So I'm just informing there are one kind of fund called tax saving funds. Then international funds. If I want to invest in US market, so the US market is having indexes called Nifty, Nasdaq, S&P 500, Dow Jones. So if I have to invest in US markets, it's comparatively easy to invest in a index. For example, Motilal Oswal Nasdaq fund is a mutual fund. If I invest in that particular fund, indirectly I am investing into the US market. So that's basically international funds. So we covered uh, equity, hybrid, bond, debt funds, uh, index funds, gilt funds, international funds, and yeah. So we covered and tax saving funds. We covered this much. Then there is one more thing uh, called fund of funds, which means a mutual fund that will be investing into a bunch of different mutual funds. Okay, for example, you are putting money into a mutual fund which has a collection of different other mutual funds. That's called fund of funds. Okay, so I hope that much is clear till there. And there are a lot of other different things. There are real estate funds. There are pension funds. There are target date funds, money market funds. But still, these are comparatively low return and low risk funds, low risk and high risk. There are a lot of other different funds if you have to cover that on a single day. So basically, yeah, the funds which I have mentioned till now are the most majorly invested funds in the markets right now. So yes, that was a brief video regarding different kinds of mutual funds in the market right now. So I hope this gave you a clarity regarding different funds in the market. So yeah, I was trying to make it as simple as possible. So thank you so much for watching. See you in the next one. Bye.